This is a demonstration of problem M232A, preparing and using a job cost record to prepare journal entries. The problem tells us that Kai Technology manufactures DVDs for computer software and entertainment companies. Kai uses job order costing. On April 2nd, Kai began production of 6,000 DVDs, job 423, for Paradigm Pictures for a $1.20 sales price per DVD. It promised to deliver the DVDs to Paradigm Pictures by April 5th, and Kai incurred the following direct costs. So the problem gives us the direct labor cost and the direct materials requisitions for the DVDs. It also states that Kai Technology allocates manufacturing overhead to jobs based on the relation between estimated overhead of $574,000 and estimated direct labor cost of $410,000. Job 423 was completed and shipped on April 3rd. So the problem asks us in part 1 to prepare a job cost record for job 423. Calculate the predetermined overhead allocation rate, round to 2 decimal places, then allocate manufacturing overhead to the job. So our job cost record would include the job number, the customer, and a description. Then we go to the first section of the job cost record and we see direct materials. So in this portion of the record we are going to record the cost of the materials that were used to complete this job, and the problem has given us that, the dates and the materials requisition numbers, and then we're going to complete each of those amounts. So $341 on April 2nd, another $725 that day, and then on April 3rd, $135. The next section of the job cost record asks us to record the direct labor, and we were also given those amounts. So on April 2nd, the labor time record 655 showed that $160 in direct labor was applied to this job, and on April 3rd another $300 was applied to this job. And in the last section we are going to calculate the overhead rate and the amount of overhead to be applied to this particular job. So the problem told us that the manufacturing overhead calculation was the $574,000 of overhead divided by the $410,000 of direct labor. So the rate of the overhead application will be 140% of the direct labor cost. So for this particular job, we had $160 of direct labor on April 2nd, another $300 on April 3rd, so that would be $460, and we would multiply that by the rate, 140%, and that would give us allocated overhead for this job of $644. The cost summary on the job cost record shows that our direct materials, which would add these three amounts, was $1,201. The total direct labor for the job was $460 and the manufacturing overhead $644, for a total cost for this job of $2,305. And then it asks us to calculate the unit cost. So to determine the unit cost, we take the total cost, $2,305, and divide it by the number of units, 6,000, the number of DVDs, and that gives us 38 cents per DVD rounded. The second part of the problem asks us to journalize in summary form the requisition of direct materials and the assignment of direct labor and the allocation of manufacturing overhead to job 423, and wages are not yet paid. So we will take the totals from our job cost record and we will make the entries to apply those costs to work in process. So our first entry will be for direct materials. And so work in process would be debited for $1,201 and raw materials inventory would be credited for the same amount. And then for work in process labor, we would go to our job cost record and we see that was $460, which we would debit to work in process inventory, and we would credit wages payable for that amount. The last entry will be to apply the manufacturing overhead to work in process inventory, and we calculated that to be $644, so we would debit work in process inventory and credit manufacturing overhead for the same amount. In the third part, it asks us to journalize completion of the job and the sale of the 6,000 DVDs on account. So once the jobs are completed, we would transfer the cost from work in process inventory to finished goods inventory. And so the total cost for the job was $2,305. So we debit finished goods inventory for that amount and credit work in process inventory for the same amount. The sale of the DVDs since it was on account, would be a debit to accounts receivable for the total sales price of $7,200, which is 6,000 DVDs times $1.20 per DVD, and then we would credit sales revenue for the same amount. Then we would debit cost of goods sold for $2,305, and we would credit finished goods inventory for the same amount. And that is the conclusion of the demonstration for problem M232A.